Quick VTSAX update. So there is a supplement to the summary prospectus dated as of January 12th, 2026. I'm going to read it quickly and share some of my thoughts. It reads, as approved by the Board of Directors of the Vanguard Group, effective today, the Vanguard Group, portfolio management and proxy voting administration services have reorganized into separate teams within two newly established wholly owned subsidiaries, Vanguard Capital Management LLC and Vanguard Portfolio Management LLC, the reorganization. The Vanguard board has determined that the reorganization is in the best interest of the Vanguard funds and their shareholders. In connection with the reorganization, Vanguard has entered into intercompany service agreements with each of the VCM and VPM. Each intercompany service agreement was approved by the Vanguard board and a majority of the independent trustees of the boards of trustees of the Vanguard funds. This is the important part. The reorganization is not expected to increase the expense ratios of the Vanguard funds, nor does it necessitate any changes to the Vanguard funds' investment objectives or strategies. The following amends, replaces, and or supplements as appropriate information described under the Investment Advisors section of the prospectus for each fund listed on the cover of this prospectus. As Vanguard is the sponsor and overall manager for the fund, it may, through its wholly owned subsidiary, VCM, provide investment advisory services to the fund under certain circumstances. In addition, if a fund has multiple advisors, the following amends, replaces, and or supplements as appropriate information described in the Other Investment Policies and Risk or Other Investment Policies section of the fund's prospectus. Vanguard, though its wholly owned subsidiary VCM administers a small portion of the fund's assets to facilitate cash flows to and from the fund's advisors. So I received this prospectus because I am invested in VTSAX. It is one of the funds that is listed on this list for Admiral class shares. And this news will not affect us in any particular way. It seems like they're just doing some reorganization within the Vanguard company. So they have two separate entities now that are in charge of the funds. It is not going to increase the expense ratio. The expense ratio is 0.04% at the moment, I believe, for VTSAX, meaning every $100,000 that you invest, about $40 is going towards expenses for that particular fund, paying people at Vanguard for who are managing the fund and whatnot. So this is wonderful. Not going to increase the expense ratios, and it doesn't seem like many things are going to change. There's still a board. I believe that board voted for this split. So there is still that board that's going to make those decisions moving forward. But I think this is good news in the sense that nothing's going to change as far as the expense ratios. You automatically think that when a company is splitting or there's another company, there's additional people to pay. It seems like everything is being done in-house and it's not going to affect the long-term expense ratios for VTSAX. Let me know your thoughts and have a wonderful day.